Okay. All right. Awesome. All right, guys. Our next speaker that we have, I think he's here. He's ready to go. And let me tell you, tell everybody to come into the room because this brother right here is, whoo, he blows my mind every time I'm in the room with him. Gerrel, are you there?
Yes, I'm here. I'm just making sure that I can. It says that my video is disabled.
I got you. Hold on one second.
Okay. All right, there I am.
There you
Can you see? All right, perfect.
And do your screen so we can see your whole, so it doesn't cut you off.
Okay, cool. Is that better?
Yeah. That's
All right,
great.
sounds good. I'm not at the office, so I apologize, and I'm still trying to figure out my home office situation.
Well, let me give you the intro that you deserve, all right? Because you are just someone that is.
And by the way, real quick, Roz, will I be able to? I'm hitting share content, but it's saying that only a host can share in this meeting.
No, you can. Hold on one second. Let me just give you. I'll give you. There you go. You should be able to in 2.2 seconds. There
Sounds
you go.
good.
All right.
And
so you guys, we are talking right now, this next segment as we're winding down our afternoon. And I want to thank you guys so much and reminding you again, this is recorded. We are going to edit it. We're going to make sure that you have access to review this later. So please know that. But I will tell you right now that you're going to have the opportunity to hear from this gentleman who is versed on access to capital. The number one issue with growing a business, either touching plant or not touching plant, especially in our community with minority-owned businesses, is access to capital. And the situation in cannabis is dire right now. And so you heard us talk about, we referenced safe banking and we referenced some other different things that were happening in cannabis. Gerrel Olivier is a senior analyst with Pure Vita Investment. He is the person that oversees funds that invest not only in cannabis, in other different entities as well. And today he's going to address access to capital and how to capitalize your business and what the environment of cannabis is right now, and giving you guys just nuggets of information and education that's going to help you to understand how to pivot and where you need to go in your journey for capital. So Gerrel, you got the floor. Make sure you tilt your screen one more time.
Sorry about that.
Okay.
Is that better or worse?
Wait, tilt it the other way.
How's that?
There you go. There you
go.
All right.
Thank you.
You got
so I am having some difficulty sharing my screen on my iPad.
If you email me, and if you want to get started and tell them what you do, if you email it.
That's great. I'll do that right now.
Yep.
You want to give me the best email?
Yep, I'll send it to you right now. Just
right. I sent it to Jodeci as well. So I think she or he has, I'm not sure if it's okay. But she has it, I think.
All right. Between the two of us, we'll get you on.
Okay, great.
Jodeci, can you
well, thanks for that kind introduction. Thanks for the kind introduction. I'm really excited to be here today and to share some thoughts that I have put together over a few slides. As Roz highlighted, I oversee the cannabis investment strategy at Pure Vita Investments. We're a large investment firm that has been around for about 11 years, and I've been with the firm for 4 years. I came and joined to help launch our cannabis investment strategy. Prior to that, I've spent several years at different large financial institutions, more specifically Morgan Stanley, where I was an investment banker for a couple of years, the Carlyle Group, which is a large private equity firm, where I focused on large mega cap healthcare buyouts, majority buyouts. I graduated from Harvard Business School in 2016, and then went on to spend 3 years at a large hedge fund in New York called Davidson Kempner, where I focused on healthcare and consumer staples investments. And it was during that experience that I got my first exposure to the cannabis industry. One of our portfolio companies, Constellation Brands, made a significant investment in Canopy Growth at the time. And so my boss tasked me with getting up to speed on the space, and I saw what looked like a very remarkable opportunity. I was young in my career, and made it a goal to find a platform that would align with what I wanted to do in the cannabis space, and thankfully was able to find that rather quickly. I'm not sure if you've had the opportunity to get the slides, Ross.
Yeah. So Jodeci said it wasn't attached. So let me I'll give you a second. You can, I just sent you my email and chat. And so let me set the scene or set the stage for this conversation and why it's so important. With Gerrel and his experience and seeing this industry, we're in an industry that is a multi-billion-dollar industry with no financial federal regulation whatsoever when it comes to banking, when it comes to access to capital. It's almost like it is an all cash business, and we are just throwing darts on the wall to get people to look at, how do you get investors to invest in your business? And you have an industry that has no regulations or no oversight into federal or any type of banking or financial products. And so, Gerrel and I have been in DC for the last couple of weeks, having conversations. If you guys have not seen safe banking as a legislation, as a bill is quickly, which to my surprise, it should have passed last year, but it is quickly going through with some bipartisan support. So I will, so the conversation today is so critical and so timely. We have this opportunity to have to be able to have someone like Gerrel that can give us, what does this mean for us especially as Black-owned and minority-owned businesses? So I'm going to go Gerrel now and just see if I have this. Did you send it to me, Gerrel?
I did. It's from Gerrel at PureVitaFunds.com, MMM.
Yep, I got it.
Awesome.
Yep, I got it. Perfecto. So I'm going to make this. All right. So I'm going to share my screen so that you guys can see. 1 second. And
oh, great.
Got it?
And I'll Roz, I'll instruct on the page flip.
Yep. Just tell me when you're ready.
I think what I'll do today is just talk about what Roz highlighted, which is just the capital environment for cannabis, some of the nuances as it relates to cannabis capital versus traditional capital, and I guess as it relates to this conversation, non-plant touching capital. You can go to the next page, Raj. I laid out a bit of an agenda to just make it easier to follow. So on page 2, kind of goes over what I plan to discuss. There you go.
Oh, did it go? Okay, there you go.
There you go. Yep. I'm going to just talk about, quickly just how to think about business valuation in a very simple format. It's much more nuanced than what I'll go through, but I wanted to try to make this as digestible as possible. I'm also going to talk about how considerations when you think about funding your business, whether you should take equity capital or debt capital. And then as Roz highlighted, I think we're going to give a little bit of an update as to what we're seeing happening on Capitol Hill and what the path forward looks like. I'm also going to provide some numerical examples. Sometimes, at least for me, it helps when I can see numbers on a screen to help drive home a point. And so I hope it's helpful for everybody on the call as we go through. So we can go to the next page, Ross. Thank you. First, I just wanted to maybe just take a step back and, Roz asked me to just touch on some of the things that I pay attention to and look at when I'm considering any investment. I've had the opportunity to sit in a lot of different seats over the last 12 years, and I think these are the things that come to mind. First and foremost, when an opportunity comes across my desk, it's typically in the form of an investor presentation. And in that investor presentation, the entrepreneur, the business owner lays out the opportunity, the thesis, the investment merits, the risk, management team overview, financials. All that is really important because that's going to be the thing, that's going to be the piece of information that grabs my attention. And once the attention is grabbed, the things that I tend to focus on, and other investors could be different, but I'm very focused on financial fitness, good bookkeeping, good tax and financial records, solid historical financial results and or detailed financial projections if you're a startup. And I'd like to just understand what the capital structure looks like. How much equity have you raised or how much debt have you raised? That just kind of gives me a financial snapshot, and it's super helpful when evaluating a potential investment. I also like to see a lot of alignment with the management team. So to the extent that the management team has bootstrapped a business, put their own funds in the business. That is really important. And I also like to hear perspectives on how the management team goes about managing the business, what systems and processes are in place. So all these things are indicative of the potential upside opportunity, again, for any investment. And then I also tend to look for areas in which I can be strategically helpful. I think investor fit is often overlooked. Aligning yourself with investors that can add value to the story can be super helpful. And the advice that I would give to folks on the call that are looking to get into the industry, either on a plant touching or non-plant touching basis, Jay, I see your question. We'll definitely talk a bit about that in terms of raising capital. Start organizing today, because in order for you to actually even get to the point where you can raise equity capital or debt capital, you got to have a plan. You got to have a presentation. You've got to have evidence of good record keeping or an idea as to how you would go about doing that. And you got to be able to sell yourself. So we can go to the next slide now for some context around capital. The reality is capital for the cannabis industry, as you all know, is very difficult. And I think what I'm going to do on this page is provide some context as to why that is the case. And quite frankly, as I reflected on plant touching versus non-plant touching, there really isn't that much of a difference in terms of the accessibility of capital when you think about the two. If we start with cannabis capital, plant touching capital, it's relatively inaccessible and almost non-existent due to cannabis is illegal, due to the fact that cannabis is illegal. We were fortunate to raise some capital back in 2019 when I joined. But the reason why we were able to raise that capital is because investors thought that we were going to have reform shortly thereafter. That ship has sailed. That hasn't happened. And we're now in a situation where there's no expectation for incremental reform. Unfortunately, there's very little confidence in the government's ability to enact any meaningful legislation. And so therefore, capital has, for the most part, left the building. There's very little capital that's actually sourced from professional money managers in this space because cannabis is federally illegal. And unfortunately, cannabis companies that touch the plant can't access the public exchanges, further strains that capital. So what happens, and this is relevant for folks that look like us, capital tends to be largely sourced from an entrepreneur's network, friends and family, private investors, family offices. I mean, these are sources of capital that are largely unavailable to us, putting us in a very difficult position to actually launch a successful cannabis business and create value for ourselves. Now, later on in the presentation, I'll talk about some changes that we could potentially see that can help bridge that gap. But the extrapolation of the current environment is quite onerous for new business formation and small business, minority entrepreneurs, social equity licensees, and what have you. And last but not least, capital, to the extent that it is available, is expensive. And when I say expensive, it can come in the form of a very high interest rate. Established cannabis companies have interest rates in the high teens or low 20s. And so you can think about what that may mean for a new startup in this space. And I'm sure perhaps some of you might have experienced this as well, even if you're not plant touching, because the reality is, again, non-plant touching businesses still derive the majority of their revenue from plant touching businesses. And so capital still remains somewhat inaccessible. And I've actually even heard of anecdotal stories where banks will shut down their relationships with ancillary businesses once they find out that they're working with cannabis companies. So that's just the context. I know I kind of painted a bit of a bleak a bleak sort of situation. But I think, Roz and I, again, have been spending a lot of time with regulators over the last several months. And we do think that there's a path to easing some of these barriers, which I'll get into later. We can go to the next slide now. And there'll be an opportunity for Q&A as well. So business valuation. I tried to think of a way to sort of capture this for those that are looking to get into the industry, whether you're plant touching or non-plant touching. There are several ways to value companies, but I'm just going to focus on two for the purposes of this conversation, and frankly, only one as we move forward. But I wanted to give you guys some perspective on, just at a high level, how to think about what a business is worth. And at a high level, a business's worth is essentially equal to the summation of all of the business's future cash flows, net of the cash that's needed to fund the business, which is largely intuitive, but the actual exercise and the convoluted nature of conducting that exercise to figure out what the cash flows are of the business could be quite robust and hard to do, and it also involves making a lot of assumptions. So the quick and dirty way that we use is valuation multiples. There tends to be comparable companies where we can look at what those companies are worth, whether it's a public cannabis company that is, or a public non-plant touching cannabis company that is doing something similar to the business in question, or a private company where there's an established valuation. Think about Cookies, for example, that just raised a valuation round a few weeks ago where the valuation was public. And so if we know the valuation, then we can actually come up with some ratios to use to apply to our business metrics. So you'll see in this table, you'll have valuation, you'll have revenue, and you'll have profit, and we'll look at the ratio of the valuation to the revenue and the ratio of the valuation to the profit, and apply those ratios to whatever our revenue or profit goals are over time to try to establish what the value of our business could be. This is going to be really important because this will inform the conversation around whether or not you take equity or debt. Don't worry, I'm going to tie it all together, but I just wanted to make sure we had all the context before we tie it all together. You'll also notice that the valuation ratios here are significantly depressed. These are cannabis companies, quote unquote, and obviously we're all here on the call because we think the cannabis opportunity is going to be a very meaningful one. Usually companies that have the growth prospects that look like the cannabis industry have valuation ratios that are double what's on the screen. But the reason why these valuations are depressed is because there isn't really a capital markets ecosystem that exists. It's very difficult for an investor to put a dollar to work in the industry and extract a dollar out of the industry, out of his or her investment, and then some. We'll elaborate on that a little bit more later on. So we can go to the next slide now. Now we'll go back to the business valuation piece, but let's talk about equity or debt. There are pros and cons to each. Some of you may already be aware of this, so I'm going to go through this quickly. The pros. When you're raising equity, it's less financially burdensome. You don't have an incremental interest expense from raising debt. It preserves you the financial flexibility. It enables you to take any cash flow that you generate from your business and reinvest it in the business to drive even more growth. You have the potential to bring in a strategic partner, an aligned investor that can help you achieve your business success. And you have no financial obligation to repay the money. But the cons are you give up some of the upside opportunity because you're sharing ownership. You can potentially lose some of your control, which is a major issue for a lot of social equity licensees across the country that need capital, and they're in a position of duress because there isn't that much capital available, and the capital provider leverages their position, given the fact that they are not competing with other sources of capital, to extract more ownership than they otherwise would have, leaving the potential social equity licensee or the entrepreneur that's looking to start up a plant touching business with less equity than they would have otherwise preferred to have. Now, if we switch over to debt financing, at least the entrepreneur is able to retain full ownership and optionality, and can actually use equity over time as a form of currency. Maybe they can use equity to recruit a new CEO or recruit a bunch of employees. Given that non-plant touching companies are actually allowed to deduct interest expense for tax purposes. So that's definitely a positive. And you can actually pay down the debt with cash flow. But the cons are there as well. It's financially burdensome. It limits financial flexibility. If it limits financial flexibility, I, as an investor, might lower the valuation that I apply to your business because you're not as financially flexible. And the only way to regain control is by buying that equity back. And that requires more capital to do so. So what I'm going to do on the next slide here is try to tie all this together with a numerical example. And you don't have to read this text. I kind of put that together quickly to just keep myself on track. But I'm going to take you through these numbers on the page here. And I'll try to do it in a way that everybody can understand. I know there might be differing levels of sort of the understanding of finance and investment on the call. And so I wanted to kind of show an example of the consideration between taking $100,000, and the units are in thousands here, to launch a business that will generate somewhere between $400,000 and $500,000 5 years from now of revenue. And you can see the costs associated with each of these businesses and what the cash profit would be both pre and post tax. And you'll notice that there really isn't much of a difference between the value that's created for the entrepreneur in either scenario. And you'll also notice that in both scenarios, the interest rate is really high, or in one scenario, the interest rate is really high. And in the equity scenario, you're giving up a lot of equity. Now, the financial opportunity could be very similar, but this is where it comes down to the entrepreneur and the entrepreneur's ability to assess how the entrepreneur's ability to assess how they would be able to achieve the actual financial results that I highlighted in this page. If you're taking on $100,000 of debt with a 20% interest rate, you might have more risk associated with achieving your revenue goals in year 5. And because you have more risk achieving your revenue goals in year 5, the valuation ratio that I apply to your profit might be a little lower than the valuation ratio that I apply to your profit if you didn't take on any debt. So there's a lot of different dynamics that need to be considered. But the one thing that I want everybody to focus on as it relates to this table on the page is how much equity we're having to give up here in the equity scenario, and how high the interest rate is. The reason why the interest rate is high is for all the reasons that I talked about earlier on within the cannabis industry. And the reason why the equity is so high is because, again, as an investor, I need to actually use comparable valuations and apply those valuations to your business. And so because the valuations that I'm applying to your business are so depressed, I have to further discount those valuations, the valuations that I showed to you on the prior page. It results in a situation where you have to give up a lot more of your company than you otherwise would have liked to. And that really doesn't have much to do with the fundamental opportunity, which is upsetting. It really has all to do with the lack of federal reform. And I'm going to show you how these two charts can change if we're actually able to get some reform that would prove to be an unlock for capital coming into this space, because it's simply supply demand. The more capital that's in this space, the more that capital needs to compete with other capital. And if capital is competing with other capital, the cost of that capital should come down, which bodes well for the entrepreneur in this scenario. So we're going to go now to just talking a little bit about cannabis banking reform and why it matters on the next page. I think Roz gave a bit of a preview, but the current and most meaningful piece of legislation, which I'm sure you folks are all very well aware of, is the Secure and Fair Enforcement Act, i.e. the Safe Banking Act. It was passed or introduced out of the Senate for the first time about 10 days ago or so. And most notably, it was introduced with bipartisan support, which is meaningful because it actually increases the chances that we see a bill pass by year end. Roz asked me to talk a little bit about what SAFE does and why it matters. I think other than SAFE's symbolic nature, i.e. the fact that we finally actually have a meaningful bill that's been passed out of the House or passed out of the Senate and went to Biden's desk and eventually would get signed, what SAFE really only does is provides safe harbor for depository institutions dealing with cannabis companies, and incrementally would allow community development financial institutions and minority depository institutions to work with new cannabis businesses and minority cannabis businesses. But we know that the cost of starting a cannabis business can range anywhere from $1 million to $10 million. And the unfortunate reality is CDFIs and MDIs are not enough. We actually need a capital markets ecosystem for this to work. And so SAFE actually doesn't really do that much. I would say that SAFE marginally lowers the cost of doing business for cannabis companies. It won't necessarily expand the availability of capital. It does not provide safe harbor for institutions that define themselves outside of depository. So that would include, Bank of America's finance business, Bank of America's debt lending business, and Bank of America's peers. It would include no safe harbor for the NASDAQ or the New York Stock Exchange. I mean, these are all mechanisms or platforms that are utilized to raise capital, but safe banking doesn't actually provide safe harbor for that. And, Roz and I got the opportunity to spend time with key lawmakers last week. Sherrod Brown, who is the head of the Senate Banking Committee, a key decision maker, Senator Tester out of Montana, a Republican key decision maker, and Chuck Schumer, and Charlie Bachtell, who is the CEO of one of the largest cannabis companies in the country, Cresco Labs, did a great job articulating why it is necessary that whatever legislation that gets put forward by Congress provides safe harbor and actually allows for the expansion of this capital markets ecosystem that needs to be there for cannabis companies to be successful. And to our surprise, it doesn't seem like the senators actually fully understood that. They thought that the safe banking language that we just talked about right now did that. And so it just shows the power of being in the room and the ability for industry to come together and educate key lawmakers. And I think Roz and I left the dinner incrementally more confident that we would be able to try to get some amendments in the bill such that we can make the cost of doing business for everybody here a lot lower and actually present an opportunity for everybody on the call and everybody that's interested in the cannabis opportunity going forward to create real value. And so if we just tie it back to the valuation on the next page, and I'm going to wrap up here. Go ahead, Ross.
I'm going to stop you for a second so you can not gather your thoughts, but just have a minute for a pause, because I want to piggyback on what you just said, that the ecosystem of cannabis is that we're all in this together. There's going to always be a True Leaf, a Cresco, a GTI, a TerraSyn, the bigger corporations who've had maybe the opportunity to get equity investors from family equity investors, individuals that are high net worth individuals who ended up investing into the companies and they took off like a rocket, right? But the issue is that if we are the cost right now as a business owner, I'm a business owner, the cost to get equity or to get money right now is too high because the valuations are so low, and I have to compare when I evaluate my business, which is a small brand business, I don't have stable markets to compare and to be able to support the valuation. Therefore, I'm giving up more equity than I should have to for a little bit of money. And so I just want you guys to hear this conversation, because you're going to see more and more about safe banking. And it's critical for us to understand that allowing an access to capital language doesn't mean that the bigger companies are going to come and buy us and mow us over and not leave an opportunity for the small minority-owned businesses. You have state programs who really have instructed and have put things into place that makes it almost impossible. Like in Illinois, you can't have any more than 10 locations. In New York, you can only have 4 locations on the adult use side. So I just wanted to kind of bring it all in full. I mean, I just want to bring it in just full concept of understanding that not having some type of reform is more of a detriment to social equity, and not having enough reform is more of a detriment than than individuals saying we don't want nothing at all, right?
Yeah.
And right. So I just want to.
I'll elaborate on that a bit as well. I mean, this has been part of the narrative, right? And just to give everybody a little bit more context, Roz mentioned Cresco Labs. Cresco Labs is actually a publicly traded company. You can buy and sell Cresco Labs as security. However, you cannot buy Cresco Labs as security on a US exchange. You can buy Cresco Labs as security and stock on the Canadian Stock Exchange. I had never heard of the Canadian Stock Exchange before I joined my firm. The Canadian Stock Exchange is an unregulated or relatively unregulated exchange. It's ripe for market manipulation. It has very little institutional investor participation. To give you some numbers around that, over 90% of the stock trading value for cannabis companies on that exchange is done by retail investors, not institutional investors, who tend to incorporate the fundamental opportunity for these businesses in the stock price. So what happens when that is the case is the valuations get severely depressed. That is what we're seeing right now. It's objective, it's not subjective, it's very much in my face, it's on my screen as we speak. And we were looking at those valuation ratios on a few pages ago. Those valuation ratios are examples of real ratios right now. And Cresco Labs' valuation to revenue ratio is 1 time. So as an investor, when Roz gives me a call and she's looking to launch her cannabis business, and Roz tells me that she's going to generate $5 million of revenue in year 1 when she launches her business, I say, okay, Roz, let me come back to you. I need to think about how to value your business. The only benchmark that I have is Cresco Labs. And that is how we do business at an investment firm. We look at benchmarks to assess what we could pay, because if I don't invest in Roz's business, my alternative is to invest in Cresco Labs. And so I need to figure out what the valuation is of Cresco Labs before I determine what valuation I'm willing to invest in for Roz's business. So if Cresco Labs valuation ratio is 1, meaning the valuation of their business divided by their revenue is 1, and Cresco Labs has $1 billion of revenue and generates cash flow already, do you think it would be reasonable for me to apply that same valuation ratio to Roz's business that hasn't generated any revenue yet? It's unreasonable from the perspective of an institutional investor who is solely focused on generating the maximum amount of return. So what happens in reality is that investor is going to take that 1 ratio, they're going to cut it in half to account for the fact that there's all these incremental risks associated with investing in a business that hasn't started yet. They're going to take that half and they're going to apply it to the $5 million of revenue. That $5 million of revenue translates to a valuation now that is $2.5 million, right? So that's just the 0.5 times the 5 million. Roz told me that she needed $1 million to get her business off the ground. And so she's giving up 40% of her business. That's 1 million divided by 2.5 on day 1. That is the most uninviting realization that a new business or new entrepreneur can have when they're looking to get into a space like the cannabis space, because you're giving up 40% of the business on the first day. Now, if we actually had a capital markets ecosystem that looked similar to all other legal and regulated industries, tobacco, consumer staples, packaged beverage, packaged food, beverages, alcohol, all those companies in aggregate have valuation ratios that range from 3 to 7 valuation divided by revenue. So let's take the midpoint 5. Let's assume that we get this amendment into SAFE that would allow for the expansion of the capital markets ecosystem, that would allow for the NASDAQ or the New York Stock Exchange to list cannabis companies. We're not saying that your startup would list tomorrow, but just the fact that you'd now have a pathway to listing your equity on an exchange makes it a lot easier for the investor to give you money, because now there's a path for them to actually monetize their investment. So if that relative ratio went to 5 times, and then we cut that in half to 2.5 times, we take 2.5 and we multiply it by that $5 million of revenue, Roz's business, which we had valued at $2.5 million before, is now valued at $12.5 million. Effectively overnight. I believe this is what would happen in short order if there was this expansion, because all the benchmark ratios would go up. Now Roz asking for $1 million, 1 million divided by 12.5 is 8%. So in the original example, Roz was giving up 40% of her business because we didn't have any reform. There's no way to value these businesses. And if there's no way to value these businesses, the valuation is going to be depressed. 40% untenable, onerous. 8%, there's actually a real path to generating meaningful value and closing this equity gap that has been persistent as it relates to white-owned cannabis businesses and Black and brown-owned cannabis businesses. And the last slide before the Q&A slide is the way that I tried to demonstrate this numerically. You'll see that the interest rate is lower, the valuation ratios are higher, and the value created for the entrepreneur when the capital markets ecosystem is there and exists is a lot more meaningful than when there is no capital markets ecosystem. So I'll stop there. Ross, thanks for teeing me up on that. That was super helpful. I know this was a lot, but I hope it gave people like at least a high level understanding of how, at least my perspective of the cannabis capital markets, and I'm more than happy to take questions.
Oh my gosh, it was so impactful and important. And so there's a couple questions in chat. If you want to raise your hand too, we'll start there. So let me go. So Jay Moore says, how does a startup raise equity? So
yeah, sure. Well, listen, I think Jay, I alluded to this earlier on the call, and I assume that you're talking about a startup specific to cannabis, Jay, or plant touching, non-plant touching.
Probably so.
Yeah. So it's difficult. That's just the reality. It's very hard if you're not in a network, right, of people that have access to capital, which, obviously historically tends to be people that don't look like us, right? If you're not in that network, it is very difficult to raise capital. I myself would have a very difficult time. And I've been in this industry for a really long time. I've been in the finance and investing world and the business world for a really long time. It would be very difficult for me to leave my job and try to raise capital in this space. I don't have any legacy money. I didn't come from any money. It's just very difficult if you just don't have the resources. And, there's this disparity that we all know exists between Black net worth and non-Black net worth. I think the data that I've seen more recently suggests that there's a 10x spread, i.e. the average net worth for those in a white household is somewhere around $200,000. And for those that are in a Black and brown household, it's $20,000. And there's a direct correlation between access to resources and household net worth. And so again, the reality is it's hard, but that doesn't mean it's impossible, Jay. And so it really, I think earlier I came in a little late, but Roz was trying to summarize some of these different programs at the state level that you might be able to access. There is a silver lining in that the safe banking language has been expanded to provide safe harbor for community development financial institutions and minority depository institutions. So that is an incremental help. But what we really need in order to make it easier for you, Jay, to raise capital is the establishment of a capital markets ecosystem in cannabis. But that doesn't exist because, Jay, at the end of the day, it is really difficult for an investor to feel confident in their ability to give any cannabis company $1 and expect them to get their dollar back unless there's some federal reform, and no investor is going to invest on the basis of federal reform. The investor is always going to extrapolate whatever the existing regime is. And so until that changes, the bar is just really high. And even if you were able to raise that capital, we talked about the example with Roz and the example on the slide, the cost of that capital would be really high. I'll give one more example. There's a woman who I'm close with by the name of Suzanne Nicholson. She's the first African-American dispensary, the first African-American woman dispensary owner in New Jersey. New Jersey is a great cannabis market. You know, these cannabis dispensaries in New Jersey are doing anywhere from $10 to $20 million on an annualized basis. Has a great location, and she was able to raise capital. She was able to actually raise $1.8 million, but she raised that capital at a $4.3 million valuation. So up front, she gave up almost half of her business. At that point, there's a real conversation to be had about whether or not she's actually going to create any meaningful value relative to the time and work and effort and stress associated with, and the complexities associated with managing both a cannabis plant touching business and a non-plant touching business. Because at the end of the day, the non-plant touching business is deriving their revenue from the plant touching business. And so the risk is only incrementally less, but it's still there. So Jay, I hope that was helpful. And I'm also happy to just connect, offline if I could, and see if there are ways that I could try to help you. But let's not forget the things that I talked about on the second slide, which is just getting your business ready to be able to address any questions or issues that an investor may have. That's something that's within your control. So do that, put together that presentation, work on that elevator pitch for your business, have a view as to how much revenue and profit you're going to be able to generate in cash flow. All those things are going to be important regardless of whether or not there's reform or not. So I'll stop there. Hopefully that was helpful.
I have a question for you, Gerrel. How do you, from a business evaluation, if you are a business that you don't have even a start point of knowing how to evaluate your business, like if you know what revenue that you can do for the first year, because it's kind of like we're in a brand new industry, you don't know where to get that data from. Is there any recommendations of how to even start when it comes to that?
Yeah, so there are a lot of the states actually publish this data. I actually track all of the data for my job that's published at the state level. Florida, for instance, you can literally go to the Floridian government website and track how much cannabis flower is being sold by every single supplier in the state. And so Illinois, for instance, Illinois does a really good job. I think it's around the first Wednesday of every month, telling you how much revenue each dispensary generated for that prior month. And you can actually pull that data on a monthly basis, back to when those programs launched. So a lot of these states actually publish the data. So if you're thinking about getting into the space, either as a plant touching entity, maybe you're thinking about applying for a dispensary license in a state, you can likely access data. And again, this is something that I'm more than happy to help with. Access data to give you a sense for a range for how much your dispensary can generate or how much your business can generate. But the reason also why I think this is a great question, Roz, is because a lot of times investors can be helpful when it comes to these things. So if you don't really have a good sense for how much revenue you might be able to generate, and you may need some help doing that, but you have the management team, you have the background, you are able to articulate the story, you can align yourself with capital providers that can help you sort of work through those dynamics. So I wouldn't be overly discouraged if you don't feel like you have the resources available to you to actually forecast what you think you can do from a revenue and profit perspective. But if you have a really good idea as to why you think your business opportunity is differentiated, and why you think you have what's called a moat around your business, investors will still be interested. there's definitely been scenarios where we've looked at, and this probably falls outside of cannabis, companies or entrepreneurs with ideas that just had great ideas, and intellectual property around those ideas, and they were looking for somebody to kind of help them think through how to commercialize that idea. And that's where a lot of investors can come into play. I almost hate to say this, but like, even if you think about Shark Tank, it's a good example. A lot of entrepreneurs come on Shark Tank and they may be making up numbers, or they may not necessarily have a really strong, high conviction view as to how whatever business idea they have will prove out over time. And a lot of times you'll hear a lot of the investors on Shark Tank talk about how they can help that investor achieve their goals, because that's what they do. And so that's how I would address it. I understand it's difficult, and not everybody has the ability to access and digest these resources, but that's the purpose of this call, right? To the extent that you're on this call, or somebody that could benefit from talking to somebody, either myself or somebody that I can put them in touch with, to help them just at a high level think through how to go about, forecasting their business. That is meaningful. So, and that's the purpose of us doing this, is to come together and help each other. Because at the end of the day, that's going to be, most important.
Awesome. Let me kick it over to Adrian. You have a question? Hold on one second. Let me unmute you.
No worries. No.
There you go. Can't hear you. Oh, man. Not yet.
Can you type it in, Adrian?
Go for you now.
Okay, there we go.
There you go.
Oh, hi, Adrian.
Okay. All right. Hey, how are you?
Well,
Hey,
and yourself?
Doing well. Thanks for asking. Any suggestions you would have, because just listening at your presentation, which is great, by the way, as a non-touching, I'm in the security industry. Any
Okay.
suggestions you would have on us vetting some of these companies who may be looking for security? Because as we were talking earlier, as you know, making sure you get paid at the end of the day for the services that
Took
we
the words
provide.
out of my mouth. Yeah. So yeah, my advice, you literally took the words out of my mouth. The problem, another major issue with the cannabis industry is it's hard to generate cash flow. The tax regime for cannabis companies is quite onerous. For those of you on the call that may not know this, plant touching cannabis companies are not allowed to take any tax deductions for any costs that are below cost of goods sold. So security business, then that's called 280E. Thanks, Keith. 280E was put in place, I think, in the early 80s. And there are conversations. I'm going to digress for a second. All of you, I'm sure, are well, or most of you are well aware of the directive that came out of the White House to certain agencies, the FDA and the HHS, to reevaluate cannabis's status as a Schedule I drug. A potential outcome from that could be cannabis getting, at the very least, rescheduled. And if cannabis is rescheduled from Schedule I, which is the most onerous, basically deeming cannabis with a high potential of use similar to fentanyl, if it's rescheduled to Schedule III, that would remove the 280E tax overhang, because that's in the statute. 280E only applies to Schedule I and Schedule II drugs. So I would pay close attention to this, Adrian, because that could actually result in the cash flow of these companies doubling overnight, if we get a rescheduling event at some time between now and the election next year. Hoping for it. I don't have any superior insight, but I know that the work is being done. So let's put that aside for a second and go back to the original question. In terms of vetting, it's really just trying to get, if you can get the company's financials and they're willing to share that with you, that'd be the best. If they're not, you would basically need to get assurances that you're going to be able to get paid, right? Because especially when it comes to, this might be, is this security for a retail dispensary for the most part, or just any security?
Yeah, any security. I mean, right now we're doing nurseries.
Nurseries, got it. Yeah, so it's the costs below cost of goods sold are high, and most of those are not tax deductible. And so, there's issues with retail companies not being able to actually even pay their suppliers, right? Like there's a lot of that's happened in the space. And so if they can't pay their suppliers, if they can't pay their branded partners for their product, you think they're going to be able to pay security? Right? That definitely becomes a bit more difficult. Or they might actually wind up not prioritizing really good security, right? And settling for less. So I think it's really just trying your best to get assurances, around the partner's ability to actually pay you in cash. And maybe you'll be able to get that rather quickly. I'm not going to speak too much out of turn because it's not something that I've personally had a lot of experience with, but I know that cash is the most important thing here, and a lot of these companies don't have it. That I know, and so it's trying to get assurances around your ability to collect for your work is my best answer to that.
Yeah.
I think it's important for us to understand that, that you might see top line, all this revenue that's happening, right? But at the end of the day, what's actually flowing from a cash into like actually being in the bank where you can say, I got this cash, like, even your, I guess, net profit is not there. And cash flow is such a big issue as well. And you can't have cash flow if you are having payments that are your tax is an expense that goes against your books, and so it affects your cash flow, right? And that you have, that's money that goes out, that's mandatory, so you can't count that as cash that's coming in. It can go back into the business. That's my layman's term. And I like to say this, that 2 weeks ago we had an equity investor out of New York who we'd been in negotiations with for almost 8 months walk away from our deal. And I was so, as you can imagine, I was pissed. I was like irritated. I knew that the climate for equity was tight right now. But across the board, I was just so irritated. But then when I thought about it, and after everything that's going on, it may be a silver lining, right? It could be not right now. What they say about a dream deferred doesn't mean it may not be right now, but doesn't mean never, right? And so this conversation is for you guys to understand financing a little bit, how to evaluate your business. And when you're giving out equity, and especially if you're going to be looking on the plant touching side, we may have some reprieve in a window where it may not be as tight as it is right now, and you don't have to give up so much. And I just want you guys to stay the course. I see Leon with Teddy's Veggies on. He's a cannabis cultivation operator out of Massachusetts. And I empathize with this brother who is ready to go and needs capital. That's it. Needs capital, right?
Yeah.
And just stay the course. So
can I just add a data point? Can I add a data point, Roz? You mentioned the great point on the revenue. I'm going to give you a real number for Cresco Labs since we've been talking about Cresco. In 2022, Cresco Labs generated around $800 and $900 million of revenue, and they actually burned $20 million of cash before CapEx, before any capital expenditure. That just shows you how difficult it is. A company that is doing almost $1 billion of revenue is generating almost no cash and is burning cash. And so the reason why that is because the cost of doing business is so high. And the reason why the cost of doing business is so high, either via 280E or the fact that they have to finance the business at a cost that is 3 to 4 times legal industry, is because we haven't had reform. And because all those dynamics exist, valuations are depressed. And when valuations are depressed, it's very hard to actually see the pathway forward for a new business. So all these things, this goes to the point that Roz made earlier, we're all linked here. We're at a point where big business is actually fundamentally linked to small business. And the incrementality of reform for Cresco is not nearly as meaningful as the incrementality for new business formation in this space and existing business viability at the lower end of the space. Because Cresco is going to be fine at the end of the day. Green Thumb is going to be fine at the end of the day. Curaleaf is going to be fine at the end of the day. In fact, if there's no reform, all those companies are just going to get bigger and bigger and bigger and bigger because they have, at the end of the day, access to resources. That's why they are where they are right now. But the incrementality for us is material. And so that's why it's important to not get too caught up. Well, I get it, not get too caught up in access to capital only helps the bigger companies. No, it actually is definitively linked to the ecosystem that we eat from. And so that's why we need to actually have this expansion of capital markets for cannabis.
Yep. So any other questions? I think there was a question on, if I'm not mistaken, I know it's a lot of information, but it's such good information and we have to be versed on the finance of access to capital and what does that mean and understanding it. And Keith brought up a question about hemp and the evolving crop. And are there any resources to be able to understand the value of that commodity or that industry and how to position himself as someone that wants to play side of the of the spectrum?
Yeah. Who's this? You said Keith? Is it the Keith? Oh, Parker. Yeah, I'm gonna, I do my best to stay in my lane. I'm not as well versed on the hemp industry as I am on the cannabis industry. And so I don't have a current view on the opportunity as it relates to hemp. What I am aware of is a back and forth that is happening between regulatory agencies and Congress as it relates to the regulatory framework that I believe doesn't fully exist yet for the hemp industry. I imagine that would play a significant role in dictating the opportunity going forward. But maybe we can take it offline and I can try to find somebody that I know that might be able to better answer that question, because I don't want to speak out of turn, and my view on that industry is not as current as it was 4 years ago when I had spent a little bit more time on it.
Awesome. One thing I like to share with you guys before we get out of here, and before you go, Gerrel, I would like your thoughts on it as well, is that I found out about this. Viridian Capital has a deal sheet tracker, and I think this is a smart way to see how they actually track deals that are happening in cannabis and the structure and the key deals. So your thoughts on this?
Yeah, I actually track it as well. We actually get the data internally. And it was actually, we did a recent investor update, and I could try to find the well, I have the chart right. I have a chart right here. I'm just checking my my inbox for the most recent update. But what they typically do is they actually, like, on a weekly basis, they'll send out a view as to how much capital was raised in the space. And I think that's the deal tracker. And I think if we were to see the most recent one, it would essentially show that very little capital has been raised for cannabis companies. And the capital that was raised in 2019 has essentially dwarfed capital that has been raised more recently, which just further emphasizes or further drives home the point that raising capital in the industry is very difficult. But what I can do is is this it right here from top 3 capital? I'll try to find like one of the good charts, Roz, that you can maybe share with everybody to show what it looked like in 2018, 2019, 2020, 2021, 2022, and 2023 year to date, to just show the lack of capital that's coming into this space for an opportunity that's supposed to be a $100 billion opportunity. And again, the barrier for that capital is almost entirely regulatory driven. But I'll find a good chart from Viridian and share that with you, Roz, that you could share with everybody on the call.
That'll be awesome. I
Yeah.
know you showed your chart of equity versus debt.
Yeah.
And a lot of the folks that are on here today, this is a supplier diversity, so they may not be touching plants, so they could maybe
Sure.
qualify for banking products and loans or what have you.
Yeah.
Do you have any position on what's the best way? And the proliferation, tell me the proliferation of these kind of like, oh, we'll provide you with $250,000 of immediate business cash and loan, like,
Yeah.
do we look at that as a serious, or are there any, advice that you can give those individuals that are seeing that and how to navigate through some of that stuff?
Yeah. I think, and I did some digging on this upon you asking me to look at equity versus debt. And the feedback that I've gotten, it may not be what you want to hear, but what I've heard anecdotally is that it's actually still pretty difficult for non-plant touching companies to access these kind of smaller sources of capital at local, regional, or larger banks, because the dollars that, I mean, it's all about like the funds flow, right? So if I have a bank account, and I might have a cannabis or a non-plant touching cannabis business that sells technology sources, technology solutions to Cresco Labs. At the end of the day, Cresco Labs needs to pay me, right? And so if the dollars coming into my account are from a cannabis entity, I'm then violating the law. I might be aiding and abetting a cannabis company. There are some nuances, but I think that dynamic, that issue, has made it difficult for smaller business. And it's also, so it's made it difficult for smaller business because I've heard of ancillary businesses getting their bank accounts shut down because the bank then audits the cash flow and then determines that the dollars are coming in from a cannabis entity. So how do you get around that? There are ways to do it, but it costs money. You might have to set up a bunch of different entities. This stuff is kind of foreign to us. I don't even know how to go about doing that. To set up work with a tax advisor, work with some accountant to set up. I have my entity that doesn't touch the plant. I'm getting revenue from Cresco. The dollars from Cresco can't come directly into my account. So I need to go and set up another entity to collect that money from Cresco. And then that entity needs to pay into my, it just adds so much complexity, and that's not free, right? And it's already hard to make money in the industry. We don't even know if Cresco's gonna be able to pay us. And so it's really difficult when, and by the way, this actually goes back to the resource piece. There are actually companies, and Roz, you've heard this argument from Charlie, I'm sure. There are companies that are on the NASDAQ. There are companies that are on the New York Stock Exchange that actually derive 100% of their revenue from cannabis companies. Weed Maps, there are real estate investment trusts that will buy real estate and lease it back to cannabis companies, but they have the resources, they have the education, they have the know-how to set up all these complex structures so that they are complying with the law. That's a lot harder for us to do at such a small scale. And so, I wish I had a better answer as it relates to ancillary businesses and their ability to access capital. But the reality is, it's just difficult because if the dollars are coming in, I wouldn't advise anybody to open up a bank account at Bank of America, tell them that you're going to be selling technology solutions to cannabis companies, or maybe trying to get away with not saying anything and just saying that you're selling technology solutions to companies, and then you run the risk of that bank somehow figuring out that wire came in from a plant touching business. As soon as that happens, you're toast, and that's just not a risk that you should take. And what you would have to do again is to set up all these disparate entities. And we could figure that out. I'm sure there's a path to figuring that out. I could maybe help with doing that, but I know it's not free. And so it actually impacts the financial opportunity and perhaps, decreases the attractiveness of the opportunity if you're just layering on all this complexity to operate the business. And again, like the bigger companies that are doing this can do it at scale because they just have the resources to do it. So they've set up all these creative structures for them to be able to list and access institutional capital, but we don't have access to those resources, which is why we need the capital markets ecosystem regulatory safe harbors to exist. So I wish I had a better answer, but I think that's just the reality, Roz.
It is the reality. Thank you so much, Gerrel, for being on with us today. I mean, you're just so knowledgeable and you make it clear, you make it plain. And thank you for the advocacy that you do on top of just running, of your job, your 9 to 5 and working.
Yeah.
Because you are an advocate. And that's where I want to leave it today, guys, as we wrap up, is that you guys can all be an advocate. Do something, find something, be instrumental, give a little bit of your time, give a little bit of your resources, of your knowledge. It doesn't hurt. It feels good when you do it. And also we have to, what they say, if you stand for anything, what is it? I can't remember, but long story short, we just gotta we gotta be in the fight, and we sidelines and wait to benefit from it. Like, we have to put some skin in the game. I put myself out there and a lot of advocates don't like the fact that I support having capital markets and institutional investors. But guess what? 5 years from now, when we see that the access to capital issue has been minimized, and now we're seeing funds for social equity start to flow cash to fund them, it's because of capital markets and institutional investors. I'm going to look at some people like, yeah, I told you, without saying, yeah, I mean it, because I was on a call and I was the only one that spoke up about this. And someone had the nerve to say, well, I don't agree with it. It was just very obvious that I was the only one in the room that believed in this, right?
Yeah.
But I'm the only one in the room that's an advocate, that's a patient, that's a caregiver, that's created a organization, and I'm a business owner. So I want you guys to walk in your truth and know that your experience matters and that you can advocate and you can stand for something. Like if someone says something about safe banking, say, well, you know what? I want access to the capital markets. Why can't I, Roz McCarthy, and my company be the first Black woman-owned cannabis company on NASDAQ? Why can't that be a goal for me? So when you tell me you don't want capital markets, that means that I can't go to just everyday Joe that wants to invest $100, $200 in my company and grow my company that way. Maybe that's how I grow my company. I want to have options. And right now, the way that things are presented, I don't have an option. So they get mad at me, and that's okay, because guess what? I ain't gonna stop.
But your valuation is higher when you have options.
Right. Because guess when I had the folks walk away from my deal last week, I don't have any options. I'm out here. I'm just out here in the wind. I'm just I don't have any more money. I'm in 4 states, 3 states, going to 4 states. I need money to push to increase my sales, and I'm just flapping in wind with nothing. I have no options. It doesn't feel good. I love you guys. We have had a just fantastic day together. We're cutting you an hour short. Our last presenter unfortunately had an issue with family and wasn't able to get on. But I think we're so full with information and with content. I want to open up the floor for anyone that has any comments, anything that you want to share. Use chat if you are a business owner, if you want us to get in contact with you. Put in, if you're not registered in our supplier diversity network with M4MM, it don't cost a thing. Get registered. There you go. Click on it. Get yourself registered. Oh, that I just sent it to Adrian, but I meant to send it to everybody. Hold on. All right. And I must, before we go any further, I want to thank my M4MM family for being on, Jodeci for always being the woman behind the scenes that just sets me up and makes sure that I'm good. She's been on all day long. It's her birthday weekend. She should be out celebrating, but she's been here all day since 8:30 this morning, making sure that we provide the very best in resources. We are going to take this and edit and create a link so that you guys can watch at a later time. And feel free to give us any insight. If you want to be a member, we encourage you, please go to InfoMM. We have a free membership. Don't cost you a thing, but just getting your information so that you can stay connected. And man, if there's nothing else, we're going to call it a day.
Well, before we leave, I do have something to say. Buzz, everyone. Thank you all for joining. Your girl Jodeci, another Taurus in the house. So happy birthday to all the Taurus. But I want to say a big thank you to Roz for giving me one of the biggest birthday presents I've ever received, which is how to really understand how to navigate my small business into this industry as providing so many different services, and also having my own product line. So thank you, Roz. Thank you, Gerrel. Thank you to Adrian, Wayne, Keith, everybody that was on, Tajana, Simone. She's such a go, everybody. So this was so precious. Thank you.
Thank you truly for sponsoring this, putting your money behind this, supporting us, and then also bringing your people on and saying that you are going to be committed to supplier diversity. We're in this fight together, y'all. This is not a solo fight. It's us together. I need you. We all need each other. And I love you guys. Have a great weekend. Love on your family and take some time out for yourself. And let's start on Monday and let's keep it rocking and rolling. And if I don't see you soon, I'll be on the Hill on Thursday. It's a Senate hearing on safe banking. God willing, they don't know if they put me on to testify. You better get ready because I'm gonna let them have it. But yes, in a very nice professional way. But they're gonna feel the energy behind why we're at a critical point right now. And I'm speaking not only for myself, but I'm speaking for every single person on this call that we know what we need. And please, Senator. Please, ma'am, please, sir, it is time to get this passed. So stay tuned. If you're not going to be in DC, you can watch it on CNN or not CNN, but they have C-SPAN. Yeah, you can watch it. Yep.
9:45 a.m.
Yep. Tim, yep. See you guys. Thank you.
Yeah.
Have a great day.
Thank you.